Welcome back for another top-notch video. This week, guys, we'll be talking about the week of the 13th of January through the 17th of January. As always, we are all about the TSP, stock funds, Roth IRA, brokerage accounts, and we are currently ahead of almost all the TSP funds for the year. Pay attention very closely to see which ones we are behind, but we are just about ahead of every fund for the year, doing very well on this channel. Again, we look at the TSP, which is these funds here, and then Roth IRA / brokerage accounts, which are these funds here. They follow the general big indices, so we have the S&P 500, the small caps, international markets, and bonds. These represent the CSI&F fund in the TSP, and these represent the major indices ETFs, such as IVV for the S&P 500, VXF for the small caps, EFA for international markets, and AGG for bonds. These pretty much translate to each other, so when I say the C fund or IVV, it means the same. Similar with every single fund on this sheet. We kind of generally do a general overview, and then we kind of go into the more specifics. Please like, subscribe, or share if you are interested in looking into the TSP or Roth IRA or brokerage funds, and write a comment below. Let's get right into it. So the first thing we like to look at is TSP Talk. Great website. You guys should definitely check it out. They do a great job of updating the charts on a daily basis with the different funds. For the week, as you can see, our funds were up quite significantly. We had the F fund that was up 0.05, the C fund was up almost 2%, S fund above 2%, and the I fund that was at 8.5%. Pretty significant for these funds. If you look at them for a chart or a graph perspective, here was our fund. So here's the F, C, S, and I fund, and G, of course. As you can see, that S fund was the best performing fund for the week. We did have a little bit allocated to that. I'll show that just a little bit later on. If we go into technical analysis, Tom does some commentary on TSP Talk. I would just kind of like to look at some of his charts. One of the really interesting things I found about this chart is we have really kind of exploded since October in the TSP and these ETF funds. The market has just continued to rise ever since the beginning of October. We're above all of our basically our trends, our trend lines, the 200-day, 50-day, and above our trend lines, and our moving averages, the 200-day and the 50-day, way up there. The last time it really reminded me of this was back in 2008 or 2018, where we had that explosion off the market. Then we had a big downtrend where we hit that 200-day moving average and kind of kept us going. Another time we really saw this was back in 2019, another really big explosion at the beginning of the year, and then just kind of not really a decent pullback, and then throughout the year. But I'm just interested to see if we'll have something similar. And he put in these arrows to look. Maybe we'll see something similar. We'll have to wait and see what happens with that. But for right now, we're way above all our moving averages, and we'll go into a more technical analysis about those. As far as other charts he just showed that the AGG or the F fund had a breakout. So that's very interesting, especially when the stocks are ridiculously moving higher. So we saw AGG or the F fund also break here. That was very interesting because we could see that maybe flip scripts, maybe seeing bonds start to do better than stocks. I'll go through that in my technical analysis a little bit later on. So that's definitely interesting, just a little things to keep in mind. That being said, let's go into our technical analysis for this week. So the first fund we like to look at is IYY. The reason we look at IYY, it's a general market fund. Goes through a majority of the stocks. Kind of gives us an overall picture of what all investors are looking at and seeing. So I really like to look at it and just kind of gauge what the whole market is doing. We base some of our ETF portfolios off of IYY, and we like to look at it for our TSP / Roth IRA and brokerage accounts as well. So with IYY, as you can see, a real big explosion since that October. Moved all the way up. We're way above our trend lines, way above our moving averages, sitting way above here, kind of waiting to see what will happen with that on a technical analysis for a long-term basis. IYY just did something pretty incredible, guys. We've had 3 weeks of derivative oscillator movement downward, and this week we saw a fake out. Now, a fake out tends to last anywhere from 1 to 3 bars, so it's pretty significant that we had a fake out here. Usually we see a pretty big explosion in price when we see those fake outs. As you can see, we don't really see those all the way shooting back. The last one we had was back in April or May. So they're about 1 or 2 a year. So that's pretty significant to see that with our derivative oscillator. So very impressive there with IYY on a long-term basis chart. And of course our PPO line, which is our price percentage oscillator line, is above our moving average. When the price percentage oscillator line, when the blue line is above that red line, price tends to increase. Also, when our oscillator is going upwards, price tends to increase. So that's on a long-term basis for IYY. Very good to be in equity funds when these are both positive and moving upward. On a midterm basis for IYY, we also did see a fake out here. Very kind of rare in this last week. So we were going down and then we started to move back up. Look at this PPO lines. It's starting to get some space in between the price percentage oscillator and the moving average. That's also a very positive sign. Our price is moving up here, which is good. No tails, so we're doing very well there. And we're still within our Bollinger Band. So this is a good place to be for equity funds right now. If we're to have a lot of in those equity funds as these charts continue to increase. And then finally on a short-term basis, as you can see, another guys, this is another fake out right here with our 4-hour chart. A lot of space here with our PPO, price percentage oscillator, and our moving average. And then our derivative oscillator is also moving up as well. Things are looking very great, even though charts are going higher and higher. This is why we look at charts. We're going to stay put until we see something in the charts that tells us not to. So things are doing very well for IYY / being in equity funds. That being said, let's go over our actual equity funds now. So this is IVV, or the C fund. As you can see, looks very similar to IYY. Funds are way up here, looking good, doing well. We'll have to wait as things are seen, but I'm impressed at how much we've come above these trend lines. Even at some point it might come down and try to test these trend lines, but it just continues to rise here. And if we look at it from a technical analysis, from what we can see here on IVV, or the C fund, from a long-term basis, this chart also just had a very incredible, pretty much a fake out right here. So usually charts move all the way down to all the way up, all the way down to all the way up. And here we see a fake out here. I don't know how long that will last. Like I mentioned, usually 1 to 3 bars. I'll have to wait and see, but usually there's a pretty good explosion in the 2-3 weeks after that. So we're excited to see where these funds will go for the rest of January. For a midterm basis, we also saw a fake out here with our derivative oscillator. We are now on day, this is day 6 of this 2-day chart. So on a midterm basis, looking very good. Price percentage oscillator starting to take off from that moving average, and price is reacting quite positively, moving up in the upward direction. Not outside our Bollinger Bands. Usually when you're outside your Bollinger Bands, we have to be careful there. Price will usually come back in, but this is good. Right about here is healthy. So we're doing very, very well on IVV is on a midterm basis, and on a short-term basis, also doing very well. This fund is doing incredible right now, guys. There'd be no reason to get out just yet. We are waiting for a signal, something like this. We saw this last week as this was going down. Price continued to move up, so it doesn't always work. But this is one fake out now. Usually we see 1 or 2, and they're very usually shorter before charts tend to pull back a little bit. So IVV, or the C fund, doing very, very well. If you had your money in this fund for January, it's doing incredible, so that's very, very good. VXF, with VXF, or the S fund. With the S fund, VXF is also incredibly rising above its moving averages and its trend line. Way up there, guys. This is just quite an explosion of upward movement on a chart perspective for VXF. On a long-term basis, we also had a fake out, so very impressive there. We went from the derivative oscillator 4.84 to 4.99. So that could last a little while. The PPO line is way above our moving average line, looking very good on a long-term basis. On a midterm basis, this chart also did have a breakout or a fake out, and it is moving up in the oscillator once again, and our PPO line did cross here with that fake out. So that's a very positive, strong signal for our charts to continue on. One thing that we have a little bit of an indicator of is price is starting to move outside that Bollinger Bands. So we'll just have to keep an eye on that moving forward. And then on a short-term basis for this fund, we did see it move down just a little bit here. Here's our very first indicator of our equity funds taking a little bit of a breather. So we'll have to see that if it continues. We'll probably stay in this fund though, as long as the PPO line, the price percentage oscillator, is above that red line. We did have one fake out here, and it lasted longer than 1 to 3 bars. So as you can see, we had a fake out starting here, and it was 1, 2, 3, 4, 5, 6, 7, 8 bars. So almost 3 times the amount of bars we usually see on a fake out, and price was acting very, very well here. Really good percentage moving up with our bars. That's all we have for VXF or the S fund. Moving on to international markets, EFA. With EFA, it hasn't necessarily broken out of that top trend line there. It is moving up for the most part. 70 is good, but it's just not doing as well as our 2 equity funds that we're in right now. So that's why we have not moved to this fund. Maybe something to look at in the future. On a long-term basis, this fund is on the way down quite a bit, so we're just not as interested in this fund. Starting to flatten out in here with the funds moving down on the derivative oscillator. PPO is starting to get close to that moving average, so there's just better funds to be in instead of EFA at this time. On a midterm basis, it looks like it's starting to come back here, which would be good. We want to see this cross before we'd be interested in it. And then on a short-term basis, the fund is rising here, and we are in our Bollinger Bands for price, so things look very good on a short-term basis for EFA, not so much on a long-term basis. So we like the charts that have all 3 signals together, and that's definitely IVV and VXF. Those are looking much better than this fund. And then finally we move into bonds, AGG. With bonds, AGG, we saw a large kind of flag forming here with this fund. Some people would call it a bull flag, and we did see a breakout just a little bit here. And like I mentioned, with that bull flag, as you can see, we have been sitting on this line here, the 113 line, for quite some time. It's kind of popped its head above 1, 2, now 3, 4. This is the 4th time. Hoping to see it hold at this point and continue to rise for AGG. On a chart perspective for AGG, long-term basis, we see that the chart is still continuing to rise. A lot of consolidation in here and not a lot of price movement. With the derivative oscillator, we saw it start to do that around November 1st. It started to come out of its consolidation of that negative form, and price really has not reacted at all, guys. It's been about the 112, 113 line ever since then. So we could see a breakout with this. We'll see. On a midterm basis, we are seeing that breakout starting to happen, but it is plateauing just a little bit. We see that line at 419, 419 for the derivative oscillator. PPO is a little bit above that moving average, and we did see a little bit of price reaction. Might be a good place to stick funds if our equity funds come down, but I'm not willing to move anything just yet. And then on a 4-hour basis or a short-term basis for AGG, that line, that PPO line, is starting to get close to cross. Last time we saw that, we saw a lot of down movement, so keep that in mind. The derivative oscillator is moving down, price is bound to follow. So that is all of our equity funds. The last thing I want to show you guys is I did mention at the beginning of the video that we are doing very well for the year. As you can see, the funds for the year, C funds up 3.14% already for the year, with all the other funds lagging behind that. How is Top Notch doing compared to these funds? Pretty dang well, guys. We are sitting at 3.113. So that is really, really good compared to what the charts are doing. 3.1. We are 0.01 behind the leading fund in our TSP fund slash Roth 401k ETFs. So that is really good. Just 0.01 behind that for the year. We are really doing just excellent. And we are leading the S fund, the I fund, the life cycles, the F, and the G fund. So doing very, very well. You guys are like this video, please like, subscribe, or share. Really appreciate it. If you have any comments, write them below. That's another Top Notch video. We'll see you guys next time.